And 72% of the time the market goes up. And the answer came to me. And that's where I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Welcome to my podcast. Okay, so the oil market has us captured. You got to be very careful because when this occurs, you start getting different signals from the market. Like, for example, this morning, the yields are high. So they said, okay, yields are high, that's good. And all the jibber-jabbers on TV were saying you got to buy, here, I'll give you the stocks. You got to buy the groups that benefit from, again, high yields. So let me just give them to you here. Okay, so it was IWM, that's your small mid-cap stocks, your banks, especially your big banks, small banks and big banks, and it was your energy and your other materials, that was one, and industrials, and again, your consumer discretionary. So you got to be very careful listening to these jibber-jabbers in the morning just because they say, okay, the yields are up, this is the group you should work with. And like our gang member, I have for them, every time the market yields are up or down, they know exactly which stocks to go, which stock groups to go to. But you got to be careful because you got to follow the money. So what happened this morning, that if people were jumping in to stocks that like high yields this afternoon, the market turned around and now you had to buy stocks that had low yields. So you don't pay a lot of attention to that. It's like a gauge. It's all it is. And what you got to depend on when you're trading is money. And what I mean by that, institutional money. If institutional money is not participating, you're screwed. So, yes, when they tell you in the morning, high yields, low yields, these are stocks, they're good for high, good for low, that's fine, but only think of it as a gauge. Now, everybody keeps asking, because, again, you always got to watch the small, mid-cap stocks, IWM, and you got to watch the yields. The yields are everything in IWM. The yields tell you, okay, when we are going to have a crash or correction. IWM always tells you, or confirms it. So that's what you got to follow. IWM, especially IWM. You got to follow that. That's the most important thing to follow. Now, we know that Wall Street uses stories in trying to move markets up and down and stocks up and down. But everyone keeps asking me, well, what about the mega caps, AI mega caps? When are they going to move? Well, let's talk about that. First of all, the AI mega cap stocks, you have to have, as the upward yield curve is going up, you want that to be less. The 150 is key for the institutions to come in and start buying. But for the AI mega cap stocks, you want that upward yield curve to be in the 50s or lower. That's when it does well. And so, for example, and you also need the yield to be less than 420. So think of this. For everybody who trades AI mega caps, you're wasting your time. You're wasting your time until that upward yield curve is in the 50s or lower. And most people just jump in and buy because that's what Main Street is telling you to do, and you get on there and listen to all these people on CNBC, you'll get killed. So the AI mega cap stocks are not going to come back. They're not going to make you money like they did unless we get the interest rates, or the yield rather, okay, at 420. it's at 430. So for those who are jumping in thinking they're buying on the bottom, no, you're not. You're not. You got to get that rate at 420. Today it's at 430. That's a big difference in that world. And also, IWM can't be rolling over while you have the spiders and the Qs or XLK all holding. So if you're going to jump in and buy mega cap stocks, thinking you're getting a good deal, you're going to buy them on the bottom, on the dip, you better check and see first. Like today, what happened today? IWM, as the Qs were holding tight and the spiders, IWM rolled over. So if you went and bought AI mega cap stocks, you're not going to feel pretty good tomorrow. Now, another thing, yields have got to stop spiking intraday. They got to settle down and stay put. If you go in and buy these AI stocks because you think you're a dipper and you buy dips, you're going to get hurt. So you need, again, IWM, make sure it's not rolling over while S&P and the Q stay firm. And you must stop these yields going up and down, up and down, up and down all day long. That's got to stop. And inflation has to be calm. Now, we don't have calm inflation. No matter what they tell you, the inflation is not calm. We don't have that either. More people are in there buying these AI tech stocks and going to get killed. Now, oil, that's the big one, needs to be under $75. What are you, nuts? Now, we're not going to see $75 oil for a while. Not unless Trump decides, okay, let's just get this thing over. That's what he should have done. Let's just get this thing over. We want a regime change. We're going to go put boots on the ground. We're going to finish this and get rid of these people once and for all. He's not doing that. So as far as the market goes, oil is not, you're not going to see $75 for quite some time. So, and another thing people forget about when they're trading. Stop betting on these deals, like the U.S.-Iran deal, okay? They're up 1 minute, down there. Don't even bother with those, okay? Matter of fact, turn the TV off and follow the stocks and the stock groups that have, again, when you know what stock groups are good for low yields, you know what stock groups are good for high yields, that's fine. It's a gauge. It's a gauge. We said that, okay? That's fine. But don't look at it as religion. Oh, yields are down, I'll go buy this stuff. Yields are up, I'll go buy this. You'll get clobbered. So, and don't be buying on, again, these stories, like the Iran deal, and just follow the money. Now, there's another thing that's going on that no one wants to talk about, this labor market. The labor market is the backbone of our economy. We know that. And it matters. We got to have a healthy labor market to drive consumer spending. And if we don't have a healthy labor market, which we don't have, consumers don't spend. The only people that are spending is the top 10%. That's not good for our economy or the stock market. Now, the other thing is that consumer spending, remember, 70% of our GDP growth comes from consumption. But we have terrible, weak jobs. I mean, most of our jobs are always part-time. We had a number that was, I think 2-3 weeks ago, whatever it was, 300,000 jobs. They're horrible jobs. They're $35,000 a year jobs, and they're all part-time. Most of them healthcare services. But they're parading around like, wow, the economy's great. No, it's not great. We got a terrible, terrible problem with the labor market. Now, the other thing is corporate earnings. You need to have, for good earnings, you got to have strong labor, strong demand, strong earnings. So your strong labor equals strong demand equals strong earnings. We don't have any of that. We have weak labor, most of it part-time, terrible jobs. We have weak demand, and we have earnings compression. Now, here's the other thing when you're trading. The banks. Now, again, the banks, we need them to be lending aggressively. But the credit conditions are such, they're not. So that's not going to help the market out. So banks, okay, lend more when we have a good, when employment is strong. So when banks aren't lending, we're screwed. And they're not lending right now, just to the very, very wealthy. The average guy that makes $65,000 a year, they're not lending to him. Now, when we have a healthy labor market with good full-time jobs, with good benefits, then you got a broad participation in the stock market. We don't have a broad participation in the stock market. What are you, nuts? We have a handful of stocks holding up this whole market. And again, if you have this, like what we have now, we have a weak labor market, narrow mega cap leadership. That's not good. And we also have, remember, recession. We're on the edge of a recession. So what does all this mean? It means that when you're trading, if you just would look at your yields and look at IWM, you'll never go wrong. They always tell you what the market is going to do. They give you the direction of the market, IWM and the yields. As a trader, that's what we look at every morning. And the other thing in the morning, stop buying stocks at 9:30 in the morning like you're going to miss something. What are you, nuts? Everybody gets screwed at 9:30. We don't start buying till 5 after 10, because at 5 after 10, everything's settled down, and we know in the morning, when the market opens up in the morning, if it moves high, let's say a stock is, I don't know, I'll just use a number here for the sake of argument. So let's say, here, I'll even show you. Is that in Coffee Talk, or is it still in show? Okay. Let me show you something, if I can. Let's see. Here we go. This is the biggest mistake people make when they're trading. Look at this chart right here. See this chart? You see three charts. Pro 1, Pro 2, Pro 3. In the morning, this is why almost 73 to 93% of people lose money. When the market opens, the first thing people do, they jump in. I got to get it at 9:30. I got to get it. It's at $48. I got to get it before it's 49. What are you, nuts? Here's what you got to remember. When the market opens in the morning and your stock goes up in the morning when it opens, you got to look at its high. You got to look at its low. And if by 10 after, okay, about 5 after 10, if that stock is not going up, meaning you can see inside its candlestick. So let's take this morning's candlestick. And I'm looking at, for example, right now, I'm looking at RF. On the opening this morning, we had a beautiful high, beautiful low, and it held the high. I'm talking about today's candlestick. And now we're looking inside the candlestick. So inside the candlestick, we had 1, 2, 3, 4, 5, 6, 7, 8, 10, 11. We had about 35 moves. But they're all moving up during the day. That means you got a very good stock. So if you look at RF, it's a strong stock. You got, not only do you have great pricing this morning, because once it hit the high, and then it never came down to its low, it stayed at the high all day long. That's what you want. And you had great volume. Volume was going up, up, up. And that's volume. And then you have the trend. This is the most important thing, the trend, the pricing here. The trend. Look at this. This is what we call a beautiful 30% sweet spot. It turned green. So no matter what they tell you on these programs in the morning, whether the yields are high, yields are low, and because they're high, you should buy this group. They're low, you should buy this group. It's a gauge. What you got to look at, again, is always, what is my IWM doing? What is the small mid-cap stocks doing? What is the yields doing? And then you look at your chart, whatever stock you're trading in the morning. Once you know that, you make sure you follow your pricing, your volume, and your trend. And you very seldom won't you make money in the stock market. Almost 75, 90% of people lose money because they don't do that. We're here to help you. We'll show you how to do this. Trading's not hard. It's hard to get people to trade properly. See you on the charts, philsgang.com.